Hello, everyone, and selamat pagi if you are joining from Indonesia. Welcome, everyone, to the briefing room of Climateworks Central today. My name is Trang Nguyen. I'm the Head of International Programs and Engagement at Climateworks Central, and I'm very pleased to be your host today. We have many people joining us from Jakarta, including a cohort of the Climateworks Blue Carbon Training Program. Because of this, we are going to use Zoom's live translation feature. So if you would like to activate the translation, please click the More button on the bottom of your screen and then turn on the closed captions. Once you've done that, go to the closed caption setting and select the translation language to Bahasa Indonesian. So you will have the translation version there. Over the next hour, we will explore how to unlock finance for Indonesia's blue economy. The blue economy is the value of the ocean through fisheries, shipping, tourism, and other sectors. With 75% of Indonesia territory composed of marine areas, the country has a lot to gain from a healthy, sustainable ocean, including things like economic security, food security, better social outcomes for those who live and work in the country coastal regions. Indonesia oceans and marine ecosystem offer climate benefits too. By absorbing and storing carbon dioxide from the atmosphere, this ecosystem can help the country to achieve its net zero commitments and also mitigate the effects of climate change. So how can we unlock these dual benefits through a thriving economy? Climateworks Center identified 3 pillars in our Turning the Tide report, which were published last year. These 3 pillars are marine spatial planning, regional cooperation, and boosting blue finance. And you can see in the chat box, there are the link to the report. Today, briefing room looks at the 3rd pillar, which is the blue finance. And I'm very pleased to introduce you to my colleagues and the 2 experts in the field to help unpack this topic. First of all, Etwin Sabarini will explore the opportunities the ocean and the blue economy offer, as well as what holding back investors from backing sustainable ocean projects. And next, Brurce Mecca will tell us about what's currently happening on the ground and what needs to happen next. We will be taking your questions at the end, so please keep them coming up through the Q&A section on your screen. So without further ado, let's kick off with our first speaker. I would like you to introduce you to Etwin Sabarini. Etwin leads the Climateworks Southeast Asia Framework for Ocean Action Mitigation Program, known as the CFOAM program. She works with stakeholders to develop pathway for Indonesia to include marine nature-based solution in its climate commitments. Etwin brings a wealth of experience to her role at Climateworks, having previously worked with the United Nations Environment Program and the Food and Agriculture Organization, Wetlands International, and also the ASEAN Secretariat. Over to you. Could you share with us about how the blue economy and taxonomy can help bridge the finance gap?
So let me just... Thank you, Trang, and good day, everyone. Today, I want to talk about one of our most critical assets for both climate resilience and economic development, and that is our oceans. Indonesia's marine ecosystem holds incredible potential, yet unlocking the capital needed to protect and sustainably manage them remains one of our biggest challenges. Today, we'll look at how a blue economy-aligned taxonomy can bridge that gap. To start, let's look at where we stand today. Our oceans are vital economic engines and climate sinks. However, global investment in sustainable ocean activities remain drastically below what is required to maintain marine health. To put this challenge into perspective, let's look at the global landscape. The global ocean economy is valued at an estimate 1.5 trillion US dollars annually. However, over the past decade, less than 1% of this value, or around 13 billion US dollars, has actually been invested in sustainable ocean projects. This stark mismatch shows that sustainable ocean investment remains extremely limited worldwide, but it also highlights a massive untapped market opportunity for forward-thinking investors. So here in Indonesia, the stakes are even higher. Indonesia's blue economy contributes an estimated 280 billion US dollars annually, accounting for more than 1/4 of our national GDP. This is driven by fisheries, aquaculture, maritime commerce, coastal tourism, and marine industries. Protecting ocean health is not just environmental priority. It is a mandatory economic and development imperative for Indonesia's future prosperity. However, public financing alone is simply insufficient to support and effectively manage our critical marine ecosystems. We must transition from a sole reliance on government funding towards mobilizing scalable private and institutional capital. Right now, ocean financing suffers from fragmentation. Investors are often funding isolated projects rather than supporting coordinated sector-wide development. The question is, how do we mobilize capital at the scale that is required? Investors want to support sustainable blue projects, but they need confidence before deploying capital. So, how do we build that confidence? The logic is simple. First, we need clear standards. When we establish trusted definitions of what actually constitutes a sustainable blue investment, we instantly lower market uncertainty. Second, common definitions drive market trust. When everyone speaks the same language, investors, regulators, and project developers, confidence builds. And finally, confidence unlocks private capital. Clear classification eliminates confusion, allowing capital to flow into well-defined, impactful projects. This brings us to the necessity of a unified finance taxonomy. A sustainable finance taxonomy creates strong links across sectors, promoting investments that generate economic, social, and environmental returns simultaneously. We already have a real-world proof point in the region. The ASEAN Sustainable Finance Taxonomy. It standardized green and transition definitions across 10 distinct regional economies and offers a multi-tiered framework to align capital across complex, multi-sector marine environment. By standardizing these criteria, we can deliver triple return, driving economic growth, advancing social equity, and accelerating environmental restoration. At its core, a taxonomy directs capital where it's needed most. It provides a common investment framework that reinforces transparency and accountability. By explicitly integrating blue economy activities into broader financial taxonomies, we create a structured gateway for private capital to flow into projects that deliver real, measurable ocean benefits. To be effective, the blue finance taxonomy must rest on 3 core pillars. Science-based criteria. It must be embedded strict do no significant harm principles. They must ensure that activity in one sector doesn't degrade another marine ecosystem. Clear eligibility and reporting. Standardized criteria helps governments, financial institutions, and developers easily identify, structure, and scale bankable blue projects. Investor confidence is also a key pillar. By mitigating greenwashing risk and enabling clear project comparison, we build the long-term trust needed to attract both domestic and international capital to Indonesia. So in summary, a strong blue finance taxonomy transforms ocean conservation from a perceived costs into a compelling, scalable investment opportunity. Thank you.
Thank you, Etwin, for sharing the insights. There is a few things I really want to recap and highlight. You share with us the vast economic opportunity of the ocean. You mentioned two very amazing, large, massive figures. For Indonesia, is around 280 billion US dollars annually. And then for globally, this figure is around 1.5 trillion US dollars. And we also learn about how in Indonesia's strategic role in fostering blue growth and investment, and also how the common standards and also taxonomy can help to unlock these investment. So that's a really good segue for me to introduce us to our next speaker, Brurce Mecca. Brurce is a PhD researcher at Monash University, Indonesia, and he also the co-founder of Lestari Advisor, which is a mission-oriented advisory firm focused on sustainable finance in Indonesia. If you've been following our work for a while, you will know that Brurce is no stranger to Climateworks. He was the brain behind a lot of our publications and a lot of training webinars that we have done before, having previously worked for us as a senior analyst in the Indonesia team, where he led efforts to mobilize climate finance in the country. Over to you, Brurce. Could you share about the key technical aspect of the blue taxonomy?
Thank you so much, Trang, and for the kind introduction, and good morning, everyone. And thank you for the opportunity to join these discussions. So here from Jakarta, I would like to speak about a fairly technical instrument. The name is Indonesia Sustainable Finance Taxonomy. I will also explain why it matters for something much more tangible, whether Indonesia can direct capital toward a genuinely sustainable ocean economy. So let me start with the first slide. And so let us look so far in Indonesia how the sustainable finance taxonomy has evolved. So Indonesia began with the green taxonomy or taxonomy hijau Indonesia that was launched in 2022. The next major step came through the Sustainable Finance Taxonomy or Taksonomi untuk Keuangan Berkelanjutan Indonesia or TKBI. So beyond a change of names, this actually represented a shift from a relatively narrow green taxonomy toward a broader sustainable finance framework. So Indonesia, the taxonomy also sought greater alignment with Indonesia's net zero objective, the Sustainable Development Goals, and regional frameworks such as the ASEAN taxonomy. So overall, the direction has been positive. However, throughout much of this evolution, the ocean was largely absent. And this is quite striking for Indonesia. We are the world's largest archipelagic country. Our economy, food systems, trade, coastal settlement, biodiversity, and climate resilience are closely connected to the sea. Yet the development of the sustainable finance taxonomy has historically been driven mainly by two sectors, land-based and energy-related sectors. So TKBI version 3 begins with fisheries. This represents the first meaningful entry point for blue economy activities. While Indonesia's taxonomy has moved from no blue to some blue, but that blue remains very narrow. This brings me to the second issue, which is the limitations of the current taxonomy. Fisheries and aquaculture are clearly important. They support livelihoods, food security, export, and economic activity across Indonesia. They have also significant environmental impacts, including impacts on biodiversity, marine habitats, water quality, and fish stocks. But the blue economy is much broader than fisheries. Indonesia's own blue economy roadmap includes sectors such as coastal and marine tourism, marine transport and logistics, marine conservation, marine-based industries, marine renewable energy, biotechnology, research, and education. So these activities are economically connected, environmentally interconnected, and often financially interdependent. For example, aquaculture depends not only on production technology, but also on water quality, feed sustainability, ecosystem health, and cold chain infrastructure. So, a taxonomy that classifies fisheries but does not sufficiently recognize these connected activities risks presenting an incomplete picture of the blue economy. The third point is that more sectors need to be included. Our research suggests prioritizing inclusions of other ocean sectors using two main dimensions. So the first dimension is economic importance. Is the activity already economically significant for Indonesia? Does it generate jobs, livelihood, public value? So that's the first important thing. And the second priority is environmental impact. The question that goes with it is, does the activity create significant environmental harm that can be reduced, or can it generate meaningful benefits? So using these two simple dimensions, economic and environment, several sectors deserve greater attention. The first is marine conservation and the sustainable management of ecosystem services, which you can see in dark blue box in the chart. So this sector has economic and environmental benefit and includes mangrove, seagrass, coral reef, wetland, and coastal ecosystem protection and restoration. The second most important is coastal and marine tourism. Tourism is economically significant for Indonesia, but its sustainability depends on waste management, water use, ecosystem carrying capacity, infrastructure, and benefit sharing mechanism with local communities. The third most important sector is marine-based industry. So this includes industries that operate in marine areas, use marine resources, or produce equipment and services for Indonesia's ocean economy. The fourth most important is maritime transport, ports, and logistics. So this sector specifically is already better represented in existing Indonesia's taxonomy structures, but the criteria should more clearly address decarbonization, air pollution, waste discharge, port efficiency, and the specific needs of Indonesia's domestic shipping fleet. So this leads to my final point. What principles should guide Indonesia's blue taxonomy design? So I would highlight four, and this principle expands on what Etwin mentioned in her presentation before. The first is that the taxonomy must be credible. It must be science-based. Eligibility must be based on measurable environmental performance. Second, the taxonomy must be prioritized for impact. Sectors with greater impact should receive more focus and include more detailed technical screening criteria. The third is that taxonomy must be usable. So technical integrity is essential, but complexity can become a barrier. Criteria should be rigorous, but they should also be understandable and implementable by banks, project developers, and government agencies. Fourth, it must be interoperable. Indonesia should remain aligned with the ASEAN taxonomy and relevant international frameworks. But interoperability does not mean copying international standard without adjustment. the criteria must still be translated into Indonesian context. So let me conclude. Indonesia has already made significant progress in moving from a green taxonomy toward a broader sustainable finance taxonomy. So a credible blue finance taxonomy should guide finance toward activities that are economically important, environmentally meaningful, socially inclusive, and scientifically credible. Because the goal is to provide clarity about which activities genuinely contribute to sustainable, resilient, and inclusive ocean economy, and therefore deserve to receive capital. Thank you.
Thank you, Brurce. You have shared with us some of the key insights, including, first of all, sustainable taxonomy has helped creating a lot of alignment with the national net zero framework and the wider ASEAN framework. But at the moment, the majority of the taxonomy is still focused on green sectors or somehow include a limited number of the blue sector, such as fishery. And you highlight the fact that there are very strong potential to broaden these sectors and to tap into the vast opportunity of the blue economy sectors in Indonesia. And you also highlighted the key sectors that deserve very higher attention from both economic and environmental impacts potential. And there are 4 of them that you highlighted, including the marine conservation, coastal marine tourism industry and maritime transport, and ports and logistics. So thank you so much for your sharing, Brurce. Hi, everyone. If you have just joined us, welcome to Climateworks Central Briefing Room, where we are talking about how a credible blue finance taxonomy can help unlock funding for sustainable blue economy projects that balance economic growth with long-term ocean health. My name is Trang Nguyen. I'm the head of international programs and engagement at Climateworks Center. And we just heard from our 2 speakers, Etwin and Brurce. Etwin actually is joining live from the Blue Carbon Training Program in Indonesia. You can see a very large meeting room with a lot of participants joining today. We are now going to open the floor to questions from our audience. If you have any question you would like to ask our speaker, please use the Q&A button at the bottom of your screen. And also before joining, we also ask you if you would like to ask the speakers any questions, and some of you already shared some questions before joining. So I'll probably also try to, as much as we can, to cover those questions in the webinar today as well. So probably first of all, I would just want to direct one of the questions from participants asked us before joining. And maybe this question for Etwin, but feel free to jump in, Brurce. Why is investment in the blue economy is so important? Sorry, you're on mute, Etwin. You got a microphone, but you're on mute.
Sorry for the technicality. This is what happens when we go on live. So I'll try to answer the question. Thank you very much, Trang. So why is investment in blue economy so important? It is so important, it is critical because marine ecosystems are the foundation of global climate stability, economic resilience, and food security. So ocean-based mitigation provides a vital pathway towards global net zero targets, while also protecting coastal communities from severe climate impacts. We see that by guiding investments through science-based standards and also capital, can effectively mobilize and deliver long-term environment and social returns. So that is, I think, why it is so important to have investments, more investments coming into blue economy activities. Thank you. I hope that answers your question.
Thanks, Edwin. And I also saw the quick question from Fabrina, how we come up with the $1.5 trillion number. And feel free to correct me if I'm wrong, Edwin or Brurce. Is that from secondary sources, which is from the UN sources? Yeah. So that's from a UN report that we take that $1.5 trillion US dollars number from. Okay, so there's another questions around building ecosystem, which is very important in terms of making sure that there's enough pipeline and investment needed for all the projects. So could you probably maybe both of you share your quick notes on what is the role of blue carbon ecosystem beyond carbon? How can this framing bring in new potential?
Yeah, maybe I can start. I think if by framing it means the taxonomy that includes taxonomy that includes blue economy. So I think it's a very interesting phenomenon that I think when we're talking about climate actions from the ocean sectors, we usually are focused on blue carbon. And meanwhile, we're coming from the ocean sector, a lot of the environmental action is also having a lot to do with the economic perspective. So I think the way I see it is that sustainable finance taxonomy can actually become a pretty strong bridge because firstly, it can help move blue carbon ecosystem beyond looking it narrowly from the carbon credit framing by firstly recognizing that blue carbon ecosystem, be it mangrove, seagrasses, they have wider economic and environmental functions than just carbon. They provide coastal protection, biodiversity values, water quality, community resilience, fisheries, etc. So all of these are not just carbon values, and this still matters because at this stage, at the current stage, the carbon market, the blue carbon market may not be financially viable if especially if a project value is merely based on the volume and the price of carbon credits in the market. So I think it brings us to the taxonomy again. So by incorporating a lot of these environmental values in the sustainable finance taxonomy criteria, I think we can shift our thinking on blue carbon ecosystem from focusing on the carbon value only. So that actually the ecosystem can potentially qualify under a wider range of sustainable finance activities and financing objectives. That creates room for a more diverse instruments and investors, including investors interested in adaptation, biodiversity, resilience, and sustainable fisheries finance, for example. So in this sense, sustainable finance taxonomy can actually help translate the multiple benefits of the blue carbon ecosystem, the mangrove seagrasses that we know, into a broader investment proposition rather than treating carbon as the only monetizable outcome.
Thank you so much, Brurce. So talking about ecosystem, I think by ecosystem, we also don't just refer to government. There's a lot of roles of different parts of the ecosystem. I think, and then there's actually a question on the Q&A chat, which is about the role of education, ocean literacy in the blue economy, which I'm probably hand over to Edwin in a few minutes. But before that, I just want to also ask Brurce about another part of the ecosystem, which is corporates. What do you think the role of the corporates in terms of involving sustainability program when it's not an impact investment and not a donation? Like how we can get corporates to be more involved in this investment?
Yeah, thank you, Trang. I think specifically for sustainable ocean investment, we really should start thinking about corporates' own appetite. So basically, if any sustainability economic activities generates no clear financial return for them, and maybe it's also not legally required, for example, I think it's really easy for them to perceive this as a donation or philanthropic base rather than something that is actually matter for the economy in the not just now, but maybe in the future to come. So at least from our research on taxonomy, this is why I think this is where the role of government is very important, where regulation matters. So in Indonesia specifically, the sustainable finance taxonomy is actually a legal requirement that is going to be implemented in phases. So this creates a stronger institutional reason actually for corporates and starting from financial institution and then corporate firms to engage. Even I have to say the current taxonomy itself still receive criticism, particularly regarding its scientific robustness, maybe, for example. I think if we're talking about Australia, for example, it's a bit different because in Australia, this sustainable finance taxonomy framework at the moment is rather voluntary basis. So I think learning from these two countries, Indonesia being it's coming from the regulatory authority and Australia voluntary, we can learn really that corporates' willingness will really much depends on both seeing a potential project whether it has commercial value, maybe a risk reduction function to them, or maybe their investor expecting it, or maybe it's just a legal thing to do for their strategic positioning. So I guess in a way that's why I believe for the Indonesia our attempt to include the blue economy in the taxonomy is very consequential because by shaping the financial industry in the country, we are starting to shape how the market is being perceived at the moment.
Thanks so much, Brurce. Edwin, I think now it's time for me to hand over to you to answer that question in terms of how important is education and ocean literacy in the blue economy, given you are joining live from a training.
Yeah. So from a capacity development and educational standpoint, expanding the framing of blue carbon ecosystems beyond the carbon sequestration addresses the critical skill, data, and institutional gaps that comes across the marine sector. Monetizing co-benefits such as the biodiversity, coastal defense, livelihood requires building local expertise and educational infrastructure. Sorry. Can you hear me clearly? Okay. So following on what I've mentioned before, framing a blue carbon through multi-value lens requires moving the educational infrastructure like universities, vocational schools, the curriculum beyond the traditional marine biology or carbon accounting, for instance. The training or educational institutions need to integrate programs that combine ecosystem service valuation, marine spatial planning, ocean accounting, sustainable finance, also all of that into building the capacity to enable the understanding to be more holistic and whole. Also, broadening the scope to include such food security, for instance, coastal resilience, shift the community outreach from passive conservation instructions or passive conservation players into actionable skills that they need to also develop. Training programs can equip the coastal communities and small businesses with skills in a wide range of blue economy activities, such as aquaculture, for instance, ecotourism operation, local ecosystem restoration, and turning the coastal stewardship into them as community into active economic participants. So building a holistic blue carbon framing forms the capacity building from a narrow technical measurement into a systemic human capital development. I think that's how we see it. Thank you.
Thanks so much, Edwin. So in the flow of the ecosystem, we are still in the ecosystem flow. I think one of the area that we also want to look at is like, okay, so what cross-border different countries can work together on? And there actually a pre-asked question about this, like it was asked like how Australia can collaborate with Indonesia on the investment opportunity for blue economies. I'll probably just might broaden that into like how countries can, especially with ASEAN as well. A lot of you, both speakers refer to the ASEAN taxonomy in some way. So how countries can work with each other on the investment opportunity. I'll probably hand over this question to Brurce. Over to you.
Ah, thank you, Trang. Maybe I'll start first with Indonesia and Australia and think about wider than that. But I think the reason why is because I think Indonesia and Australia learning experience would be very much interesting because the two countries take different approaches on their own sustainable finance taxonomy or try aligning the financial institutions on sustainable economic financing. I think just a refresher again that Indonesia's TKBI is mandated by the Financial Services Authority that regulates the banks and non-banks institution here. And the implementation is in phases, but it is increasingly embedded in Indonesia's financial regulatory architecture and headed towards later perhaps a disclosure requirement. And meanwhile, as far as I know, Australia's sustainable finance taxonomy is currently on voluntary basis, so there is no legal repercussion for banks for not doing that from legal perspective. We're not talking about the market behave on because of this, but we are talking about the legal perspective. I think we can safely say Indonesia is legally required and Australia example is not. But somehow the two financial markets also headed towards sustainability, like taking into account that it is important to know better how to finance what activities that consider sustainable, especially in Indonesia, for example, in the ocean sector. I think these two different situations is actually a very strong basis for mutual learning. Australia can learn maybe from Indonesia on how regulatory approaches can affect adoptions, usability of it among financial institutions, and finally the behavior of firms that accesses finance from this financial institution. Meanwhile, Indonesia can learn from Australia on how market signaling from voluntary-based sustainable finance taxonomy can actually influence the firm's behavior there. I think going back to the ocean sector for blue finance, I think we should, while Indonesia is very much has big ocean sector and Australia and maybe more than Australia, I think it still creates a good learning from two countries. The dialogue could help both countries develop taxonomy approaches together. Maybe Australia will be interested to have a blue economy taxonomy too. Or maybe Indonesia can also learn from sectors in Australia that's more developed than Indonesia's at the moment. So I think this is a two closest example that we can have at the moment. And regarding lessons or learning together with other countries, especially in the Southeast Asia region, we can always refer the term interoperability when as we discuss and follow the ASEAN taxonomy. During the Indonesia ASEAN presidency a few years ago, Indonesia introduced the Blue Economy Framework in the ASEAN framework, not necessarily translated to the taxonomy yet, but I think that's brings the spirit of sharing the lessons from Indonesia to other ASEAN countries. And I believe when we are talking about the taxonomy as a vehicle, it can do just that. It can be a vehicle of acknowledgement of what sustainable economic activities are in the region and what how that should look like, especially when we're discussing environmental consequences, and so that would create a clear signal to investors in the region that this is what the region thinks a sustainable economic activity should look like. I hope that answered your question, Trang.
Thank you, Brurce. That's actually very clear. And you also just not only answer the question related to Australia, Indonesia, but also talk about the dynamic within the ASEAN and how the region can work together. So before closing the sort of ecosystem group of questions, there's one important question on the Q&A chat group, which is like how to integrate wisdom from the indigenous coastal communities in Indonesia. I'm probably just might quickly hand over to Etwin, but also just want to highlight that at Climateworks, we also very value the wisdom of the indigenous community in countries we operate with. And that's integrated in the consultation of the work and also in terms of how we design different programs as well. So over to you, Etwin, if you have any reflection on the question.
Yeah. Thank you, Trang. I think it is very important to work alongside our indigenous communities because of the wealth of knowledge that they have, particularly in how to manage sustainably. And we believe long ago they have managed sustainably before capitalism came about. But going back to that, as I mentioned about the role of education, the role of capacity building, and the role of empowering the coastal communities, that is where it lies, to not only bring what current science-based research has come up, but also to learn from the local wisdom, the way to live alongside nature. And I think there's a balance there that we have to go back to. And I think more and more now that we are actually seeing and feeling the impact of climate change, people are starting to really look back and thinking of how several hundred years ago, our ancestors have managed to live quite peacefully with nature. And there is a strong point of they're doing something right. And we should look back to that and learn from that. And together with our scientific research and technologies to integrate that into our forward-looking and thinking and concept of sustainability. I think that's how. Thank you.
Thank you so much, Etwin. All right, so I think I'm gonna now move from ecosystem group questions. We're gonna move into the sort of portfolio and sector question type of thing. And I'm also just bearing in mind we only got around 5 minutes left for the Q&A. And thank you so much, Brurce and Etwin, so far for answering all these questions with lots of insight and passion. Probably there's a question around the portfolio, investable portfolio. So I'll ask you first, Brurce, one question around that. And then there's a question around like the sectors, like the importance of the sectors, different sectors. So I'll hand over that to Etwin. So how can Indonesia blue finance taxonomy enable fragmented small-scale initiative to be aggregated into investable portfolios?
Thank you, Edwin. This is a very good question because I think it translates to a lot of realities in Indonesia. I think When we're discussing the blue economy, it encompasses many small-scale projects, maybe small-scale fisheries projects, small-scale aquaculture, small-scale blue carbon project. And basically, these individual project might financially have higher risk. Some have higher risk than others. So the question I think is very much asking how can we bundle them together really and distribute the risk and then we can basically use financial instruments to somehow reduce the risk altogether in portfolios. That's a very interesting answer, an interesting question when we're looking at from the ocean finance perspective. And since today we are talking about the taxonomy, I think we can start to see a blue finance taxonomy as a tool that can help us create a common language and consistent criteria about what is sustainable and what is not regarding all these small-scale blue economy projects. So this is particularly important for Indonesia. Is the projects here are diverse and all small scales and scattered, and basically by having a coherent standardizations, especially among in the financial industries about how these projects are classified, screened, and their environmental benefits demonstrated so that taxonomy can make it easier for financial institutions or intermediaries or project developers to organize and aggregate multiple smaller projects into a larger investment portfolio. So it can potentially reduce the cost for due diligence and information asymmetry and improve the comparability between one portfolio and others. And to some extent, it can potentially give investors greater confidence that the portfolio meets their own sustainability standards and is actually legally credible because taxonomy in Indonesia has to meet certain sustainability standards, for example. However, I think when we're talking about taxonomy, we should also acknowledge that that's the role of sustainable finance taxonomy is just that it creates the common language, but it may not automatically create aggregation because taxonomy cannot work alone. It needs to be complemented by many factors, including project preparation assistance. This is where philanthropy, donors, government funding can come. And also standardized operating documentation. This is more on the basically management and organizational skills. And we need also, like Etwin said, education because we need capable institution, capable people who are able to perform this work. And also, of course, we need financial institutions that have the risk appetite to actually invest on sustainable ocean economies. So, in conclusion, taxonomy can become a very powerful tool to aggregate small-scale projects, but it requires way more than that, and that's probably too long to talk about now. But basically, it can start from the taxonomy. Yeah.
Thanks so much, Brurce. I'm conscious of time. There's a very one important questions that I just want to touch on quickly before handing over to Etwin for the last question. So there's a question around shipping and port industry. Is it worth financing? You probably might see in Brurce's presentation earlier, we highlight that the very important role of maritime transport sector and transport and logistics sector as part of the mapping that Brurce has presented. And then there's a question around like how about other sectors such as renewable energy. I would understand it from the ocean context would be the role of offshore wind sector. So if you want to have a look at our report, Turning the Tide, which is the Seafoam phase 1 report, there's a lot of materials about the offshore wind sector in Indonesia. So you probably might just want to look at some of our previous reports and production. And I'm really sorry that we are run out of time to go into details on that today. Etwin, I would like to hand over to you for the last question. What do we hope to achieve from this online event, and what's next?
Thank you, Trang. And yes, so from our end, we hope to move the climate action conversation beyond land-based decarbonization. The NDC previously have been very, it's strong from with land-based pathways and things like that. And I think only since the last few years that ocean has come into consideration and has brought into the conversation. So beyond that, we want to add in the potential of blue sectors, like for instance, what we've discussed today, the ecotourism, the marine conservation, the sustainable based industries, that's showing the possible impact of incorporating these priority sectors into sustainable finance taxonomies that can, and we hope, transforms the roadmaps and plans into investables and bankable projects. So what we see as the next step would be to expand the future iterations of Indonesia's sustainable finance taxonomy to also include high impact blue economy activities, such as we have mentioned earlier. And we also aim to develop de-risk finance mechanisms for coastal businesses and hopefully to enhance taxonomy usability and also interoperability. Thanks, Trang.
Thanks so much, Etwin. That brings us to the end of our discussion today. And thank you to our panelists, Etwin and Brurce, for your amazing insights, and also to our production team behind the scenes, Arwin, Tyra, and Amrit, and also Sophie as well. Climateworks is a philanthropically funded organization, and none of this work would be possible without the generous support of our funders, and a lot of them are also in the call today. Thank you so much. And we would like to extend our heartfelt appreciation to the funders of Seafoam programs and warmly welcome new partners to join us in this amazing journey of advancing ocean-based climate mitigation in Indonesia and South Asia. Also, thank you so much to all the participants for the very interactive discussion and spending your time joining the call today. We will send you a recording from this session, and as well as all the resources being discussed today. So please keep an eye on your inbox. And thank you again for joining us. Hope to see you next time. Terima kasih. Thank you.